Good morning, Scott Redler, T3Live. Welcome to today's morning call. At this point, take out that price point sheet. Yes, I know I haven't said that in a while because I just don't do that when we're all together. But this price point sheet is a valuable tool. You could download it, print it out, have it in front of you. On there, you get support, resistance, action areas, some quick comments about what each stock is doing. It's just something good to have in front of you because things are moving fast. And as far as today's action, I'm not very excited about it. We know Wednesday was one of those big potent down days, one of those days to take notice that a lot of us got cleaned out of a lot of our momentum holdings. And then the last 2 days, or yesterday and today, are really like wait and see type days where you can make some money, but not having too much commitment. Yesterday, Dow was up like 110. Felt like the weakest rally I've felt in a while, where tech names that we trade were all lower, momentum names were weak, but the Dow was still up. And then today, we're up another like 12, 13 handles. So now I think there's going to be a little bit of a tug of war in that 1250, 1255 area on the S&P. So if you take a quick look here, let's take a look at the chart. Obviously, starting back in October, we had this really nice rally. You know, after that October 4th outside day reversal, this is when we broke the downtrend. You know, and then you had this nice little flag type pattern, holding higher, following retracement rules, and then we put our little peak in. You know, right around 1292 into some big resistance. And now, ever since then, we've been trying to hold this upper range. On a macro level, I've talked about this 1215 being a big area to hold, the 50-day being somewhat of a line in the sand, you know, for the bulls. And as of now, we're still holding higher. But yeah, 2 distribution days, like we saw last week, that started to get negated, right? We started looking good. And then you had Wednesday's really harsh down day, which had to have you switch gears a bit. So now the question is, can we get above and close above this 1250 to 1255 area, which would then make this bar or this day lose control, and then we're still just in this upper range. And within that upper range, we have to figure out where are the setups, where is the commitment, what do we want to do? And at this point, I don't see any great setups. Yesterday, obviously, we had a really good setup with Apple. Apple, you know, showed some weakness. It closed on the 50-day. Then in yesterday's gap up, it was like a sign where we could, you know, get short. It went negative first. It went below the 50-day before the market even came in. So that was a nice, clean momentum trade. So if you look at the chart here on Apple, you'll see that you had that island top, right? This was the island top. And we were talking about, you know, this wouldn't have as much power if we could clear it, okay? But we were never able to clear into this gap. And then obviously on that Wednesday, it trapped a lot of people trying to play for that breakout, and that's what helped intensify this move to the downside. So sometimes what you see is, you know, you see a bit of a retest, okay, and that could take Apple back to 390 to 394. So if you did cover, if you put like remember we talked about the 100-day yesterday, you put the moving average in, you show the 100-day, that was a decent spot to cover a nice amount of your short. You know, if you don't like to be so short overnight, I covered, I would say, a big majority into that. I'm still short some. And if we can get up and retest this 390, 394 and fail, I'll probably reshort more. Okay, and then if we could stay below this, it'll show real weakness. And then perhaps we even get another trade if it were to break yesterday's low of the 100-day. And then we could see a bigger move down to perhaps this 200-day moving average, which is, you know, below 370, and that's a bigger trend line. So right now, great trade for those yesterday. It happened in the first 30 minutes. You know, now what happens now? How much of this bar can we take back? Do we take back half, or do we go up and retest that broken trend line, which would push some people a little bit to the edge, and then see what happens from there next? As far as some of the other names, Google, after a nice 2-day trade we had, came right back into that box. So I would just leave that alone. Just trade it back and forth, or if you're an investor, hold on longer term. IBM, look at yesterday's action. You know, it held you know, this support. Remember we talked about IBM breaking this uptrend that it's been in place for a while. So I would continue to watch IBM. The longer it stays below this, perhaps the more jeopardy would get to breaking this, but for now it's still okay. You know, Baidu and Sina have really just been out of play for me, not even really looking at them. But all in all, I guess you can make a case that it's still hanging around. It's still above a lot of the moving averages here, but it would just I'd be a little bit careful there. As far as Amazon, still below its earnings gap. It doesn't look good. This action is definitely for the birds. We had one nice trade a while back right around here when it went into the gap, and then ever since, it hasn't been able to push into the upper end. This is that earnings gap. So the earnings gap to the downside is still controlling the stock. So at this point, I don't think many people are over trading Amazon. It's just we're letting it, be on the side. As far as other scenarios, I think in the oil patch, I showed you guys Hess yesterday. So to me, it was acting a lot better than other stocks, and that group is acting a bit better for now because oil has been really strong. Hess actually engulfed the Wednesday action, and now it looks as if it's trying to break above this mini flag. So if this does, and we start seeing stocks continue, it'll give the bulls a bit more confidence, but it might be confidence in different sectors that we're not that familiar or accustomed to. XOM looks okay. Same type of scenario, a bit more, not as strong as the chart in Hess, but it's still hanging around, almost closed near Wednesday's highs. I'm sure today it's opening up above it. So it's showing you that the things are staying intact. If you guys remember with this stock, this was when we put it on the buy list, which shows you why you love when stocks break above support. Then it also shows you why you don't chase it. Because look what happened when it broke this ascending channel. It basically came all the way back down and retested, and then had to rally off that. So if you miss this first, this first initial move, I know it's hard not to chase, but sometimes you get another area. As far as RIM, I think it was in the news yesterday. It's like $17.50. Guys want to buy it. I think if you want to buy RIM and put it in a swing account from $17.50 down to $15, you're bound to get some kind of takeover talk or some kind of whatever, like an icon type of individual coming in there. It's been a broken stock. We've been talking about it being a broken stock for so long, and at this point, I don't think anyone's been trying to buy RIM, which is great. But right around here, I guess if you want to do it like in a 3-tier format where you could buy a little bit and just not really care about it too much, there will be a time when you get another like 2-day move like this. But I expect this one to be from lower and not as high, so maybe it can get back to almost 20. So just realize if you're playing that game, it's just tricky and not that much fun. The banks, nothing to really be said. They were the weakest group, obviously, after Wednesday. People don't know what their exposure is to a lot of these sovereign bonds. Goldman Sachs broke below that 102, 103. Not really compelling here. This was a decent trade for someone. It broke below it. Now it's just trying to hang around. I'd say the longer it stays below this area, actually up to almost 105, the more prone it could be for a rollover, and that'll give us some clues to the overall market. Let's see what the MU are doing with some of these ag names. Let's see. This is the ETF. And nothing really spectacular below the moving averages. CF was strong for a bit. Still hanging around. All right, this is still hanging around. It's, you could draw a few different lines here. This is one uptrend that's still there. This one doesn't even come into play yet. Holding some higher support. Yesterday had a bit of a red dog reversal where it traded through. Wednesday came back above. You have your predefined resistance. So this is acting well for an ag. We talked yesterday a little bit about oil for the first time in a while. It's had a huge move. Definitely something that could psychologically start affecting the market if it gets above 100. You do see an ascending, very tight channel starting to come into a bit of an apex. So I would say a good spot to sell some oil, and if it starts to break below this 36.50, perhaps it corrects a little bit and we can get a cute short in the USO or in oil if you trade that. But overall, today is it's Veterans Day. Congratulations to all you veterans out there, and I want to thank you for serving the country. My dad was in Vietnam, and thank goodness he made it out. Being an officer or in the Army is something that is just it's an unbelievable thing for you to do for the country, putting your life in jeopardy. And I think people really forget the veterans and how they're treated when they get back, and that's just a whole another conversation. But think about the veterans today, think about what they went through, and just give them a little bit of a mental shout out, because that's why some of you guys are off today, not just so you can go shopping or spend time with your families, because people have died trying to serve the country, or they are injured, or whatever it is. That's what Veterans Day is for, to reflect and give them some thanks because they are protecting our interests. And that's it. Tune into the radio and the chat. It's going to be probably a half day for me. A lot to do over this weekend. It's been a really volatile week, but I think all in all, people are on the right side of it. Everyone has some risk off, and I know you might be a little upset that you got shaken out of a lot of your trending positions Wednesday, and we've been up 2 days in a row. Get over it. Just know that you're doing the right thing, the right trade, and there'll be other ones that present themselves with a little less risk. Scott Redler, T3 Live, The Morning Call. See you to recap. Have a great day trading.